Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Drill, baby, drill goes global. President Trump says Venezuela will turn over up to 50 million barrels to the U.S., with Washington reportedly also demanding Caracas sever ties with China, Russia, Iran, and Cuba. The White House says Trump won't rule out the use of military force to acquire Greenland, with the president and his team discussing a range of options. And open for business. Saudi Arabia scraps all restrictions on foreign stock investment as the kingdom looks to revive its lagging market. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Barsechi in Dubai, keeping a close tab on developments in Venezuela and also potentially in Greenland as well. That's a new one to think about in the geopolitical mix. And, of course, the reaction in global markets. What we did see yesterday was a record high for the S&P. So this is the first one for 2026. We're on a couple of days into the trading year, but a new record high. Today, though, as you can see beside me, sentiment has turned a little bit sour. The handover from Asia Pacific today is actually quite negative, down 0.2% for the Asia Pacific index. And this is obviously after a massive run up at the beginning of the year, as well as we had been talking about. Asia in general had been outperforming the rest of the world. So a bit of a pullback today. Some of those tech stocks losing a bit of ground in early trade. S&P futures trading sideways, so just shy of 7,000 here. Though, of course, as we've been flagging at the beginning of the year, it seems as though most of the analyst community are pretty positive about U.S. stock market indices. We're going to talk about the global outlook shortly with our guest. And then Brent, take a look at where we're at today, exactly at $60 a barrel, down 1.1%. And today, the drivers are twofold. One, news that the U.S. is looking to receive 30 to 50 million barrels of oil from Venezuela. And the second is potential progress on Ukraine-Russia peace talks. So let's see what's going on there. But again, could be negative catalyst for oil, even though you think about the longer-term supply picture and how the fundamentals this year also present quite a bearish case. So down 1.1% for oil this morning. And then silver, massive run-up towards the end of last year. The best-performing commodity was up more than 150% in 2025. Today slipping a little bit, but still just shy of $80 per ounce for silver. Now let's switch over. I want to draw your attention to a big regional story, and this news came out yesterday, and the fact that Saudi Arabia are looking to open up their capital markets to foreign investors, easing a lot of those restrictions. We will be discussing this on the show, the ramifications, what it means, but essentially take a look over the past year of these various regional indices, and you can see quite clearly the white line is the Tadawul, that is the Saudi stock exchange. It has underperformed because of the price of oil, because of output restrictions on OPEC that hit the Saudi budget. It was reflected in the Tadawul. Over the course of the past year, it's down 15%. Compare that to other regional indices. Egyptian Stock Exchange up almost 40%, Tel Aviv Stock Exchange up 56%. So perhaps this is one measure that authorities are introducing to help boost the prospects for the Saudi Tadawul. We will talk more about that on Horizons today. Anyway, let's go back and check in on how markets in Asia are faring. Min Lo is in Hong Kong for us. Min.
Hey, Jumana, we are seeing Asian stocks taking a bit of a pause in that rally after what had been the strongest ever start of the year for Asian stocks. You can see Kospi and TAIEX actually hitting record high yesterday, today pulling back a little bit. And even that strong comments from President Lee Jae-myung in China, both sides reaffirming their strong, stable ties, not enough to lift the index here. There is some market chatter that maybe some of the news coming out of the tech conference in Las Vegas was not fresh enough to pull up the markets. And take a look at the Hang Seng and Nikkei, both taking a beating after that spat between China and Japan is heating up. China announcing that effective immediately, it is going to impose ban on dual-use items being sold to the Japanese military. So you flip the board, you take a look at the impact on markets, because the statement from the Commerce Ministry is very broadly worded. Potentially, it could apply to even civilian companies with the weakest indirect links to the military. So a lot depends on how the Chinese government interpret it. And here you can see the automakers taking a hit here. Equipment manufacturers could be affected as well. You flip the board, where we are seeing gains in Japan is the rare earths and metals processors. They are all seeing a pretty decent bid here, 20% gain for Toyo Engineering.
Yeah, well, metals keep climbing, a bit of a pullback in tech this morning then is the summary. Min Lo in Hong Kong, thank you so much. Now, President Trump says Venezuela will send the U.S. as much as 50 million barrels of oil, with the sale proceeds to benefit both countries. Bloomberg's Stephen Sachinsky, who leads our Asia energy coverage, joins us from Singapore. Never a dull day in energy, my friend. Let's talk about this latest announcement overnight that Venezuela, well, according to Trump, will be sending 30 to 50 million barrels of oil to the U.S. What are the implications of that? Do we understand over what time frame the oil will be sent over?
We don't know a whole lot. And this is a very typical Trump thing where he'll say something. We don't have really clarification from the other side, the Venezuelan side, or exactly what he means by 50 million barrels. I think there are a few ways to look at it, right? 50 million barrels, put that in the context, Venezuela produces about 800,000 barrels a day. So that's like, what, 50 to 60 days worth of production. There's a bunch of oil that's sanctioned. Trump mentioned sanctioned oil that's on the water already. Maybe it's some of those shipments. Maybe it's shipments that will soon be exported over the next few months. It is really unclear. But what is clear, though, is Trump does see oil riches as a fantastic avenue to really squeeze value out of Venezuela and his recent interest in the country. It's also a way for the new government, to sort of cement ties with Trump as well. They offer him some oil that maybe would have gone to China otherwise, do some sort of profit sharing to some degree. It's really unclear. But what is clear, again, is that Trump wants oil, and he says he's gotten it.
Yeah, well, Trump wants oil. He says he's gotten it. He also wants American companies to participate more in that oil extraction in Venezuela. We wrote an article up on the terminal, I think it was a couple of days ago, saying that that would require investment of north of $100 billion over the next couple of years or so. What do we understand is the appetite from oil companies to engage in this type of investment, given where the price of oil is trading right now?
You're 100% correct, right? We had that story, $10 billion for a decade. That's a lot of money. And if you wanted to bring that oil, so that would be what you would need to bring Venezuela's oil production from the 800,000 barrels per day to 3 million barrels per day, which is where we were sort of closer to the early 2000s, kind of revive that production. Now, there are a lot of issues with this. One, why would big oil want to go into Venezuela when there are these geopolitical risks? If they can go and invest that, save money, and get maybe better supply out of places like shale fields, which are in their own backyard, or other countries that have a somewhat better relationship with the United States right now. The one thing that Trump could do is sweeten the pot and provide some sort of guarantee, some sort of subsidy for oil companies. There have been reports that the president will be meeting with big oil companies later this week. When we're talking about, the likes of Chevron, Exxon, and other U.S. oil producers to kind of hammer this out. But at the moment, there are a lot of things that would make it challenging. And like you said, one of the biggest challenges is just the sheer amount of investment, because over the last 2 decades, Venezuela really hasn't been keeping good upkeep with its infrastructure. So you have to invest in pipes. You have to invest potentially in new rigs. Their rig count has gone down as well. So all of that together might not be attractive to a company that, when you look at the oil price, which is Brent kind of really hitting that high $50 level right now, do you really want to put your money there, or do you want to put your money in some place that's more of a sure bet?
Yeah, that is precisely the question. I think that is going to be on their minds. Stephen Sachinsky, thank you for running us through it. Well, we're going to shift now and talk about global markets, because the record-breaking global stock rally has stalled in Asia this morning as Japanese equities slipped amid rising tensions with China. For more market insights, Maurice Gravier, Group Chief Investment Officer for Wealth Management at Emirates NBD, joins us. Good to have you with us. Happy New Year.
Happy New Year.
Good to start the year off with you, Maurice. So 2025 was a great year for stock markets. I see it was a great year as well for you.
Oh, yes.
How is the narrative changing going into 2026? Is it just the same themes as 2025 that you think are going to be predominant and driving market price action this year as well?
It's a very nice way to put it because it's a continuation.
Right.
Last year we said it's the winds of change, new policies, new technologies. It was all about markets taking a turn, acknowledging that the world would change. 2026, it's the beginning of the journey towards this new world with very heavy tech transformation and also a new balance of power like we see every day at the end of the post-World War II, multilateralism, and so on. So it starts with probably more of the same in terms of backdrops. You have AI capex, you have reasonable growth, reasonable inflation, monetary easing, but with less upside potential and more risk. So that's how we...
But you say, okay, so it's the winds of change, to say, to use your phrase. And I just wonder whether that means also expectations are a lot higher now, because last year was the year of DeepSeek and LLM and agentic AI, and we had to get our head around all of these terms. And now expectations just seem to be so much higher in terms of what investors and consumers are looking for out of these AI companies. CES is a very good example yesterday, and my colleague was telling me, despite all of the announcements, actually the reaction in some of these key stocks like Nvidia, AMD, Dell has been underwhelming. They didn't deliver enough for what the market wanted to see.
No doubt. Our theme for this year, after winds of change last year, is eyes wide open, and it's about vigilance and selectivity. And in the AI complex, first, don't get me wrong, the AI race is real, the technology is real, and the end market is immense. It's all about first, the timing of the return, we have no idea, and the competitive positions that will, not everyone will be a winner, there is no doubt. We're not too concerned about what happens in the listed market, frankly. Valuations are a bit optimistic, but they are not too excessive. If there is risk, I believe it's more in the private hands, in the private markets, because of this big infrastructure build-up. Remember telecoms 20 years ago, or even railroads 200 years ago. It's not always the infrastructure owner that gets the biggest part of the value.
Okay, so this year, are you seeing value or are you seeing growth? Is there value?
We see selectivity, and I told you more of the same with less upside and more risk. It sounds very negative, but we start the year with a positive tone because we have this AI capex. We will have better consumption with tax refund in the US, and we have liquidity with the Fed reconstituting the reserve, which is about quantitative easing. So we also think that copper will be supported. And when I say copper, we don't invest in copper, but it's correlated with emerging market stocks. So we start the year positively. Then we will see volatility will hit. We like emerging markets.
Okay, I was going to ask you, where exactly are you looking to invest right now then?
Yes, so in our allocation that we just decided yesterday, we overweight emerging market assets in both fixed income, where we think the risk-adjusted returns are simply the best, and in equities with a preference for China now, Chinese equities, yes.
Yeah, okay. It's interesting because I do feel like the analyst community, I mean, obviously today is a different case in point, but starting off the year, there's been a lot of bullishness about Asia tech. I'm seeing the likes of Goldman Sachs are forecasting a 20% rise in MSCI China this year. Are you not worried about perhaps some of the geopolitical headwinds that could hit? And, there's rumblings about Taiwan and a more assertive U.S., and maybe the U.S. turns a lot more assertive with other strongman regimes around the world.
That's a very fair point. First, the upside potential is here because you mentioned tech. China is not far, both in terms of bits, I mean models, and atoms, the chips, and the valuations are half of what you find elsewhere. And on geopolitics, you're right, but in a way, let's put it this way: if it's fine for the US to invade Venezuela and take their president, which happened, then China can feel very comfortable because Taiwan is not even considered as a country by the international community. So I don't see. It's a regime of strongmen and superpowers, but I don't think that anyone can challenge China in Asia, really. Nobody can challenge the US in America. And then the big question is in Europe, between Russia, Ukraine, the EU. I think the strength is not very clear.
So I guess the takeaway is that geopolitical headline risk will be high, but the way it actually is going to infiltrate down to markets is negligible, which is what we got last year, ultimately.
We will have other risk for markets, because when I mentioned capex, consumption, and liquidity, of course, the risk is inflation. We think it's not for this year, especially with the midterm elections, and inflation is an election killer. Mr. Trump knows it. But that's the kind of risk that we have ahead.
Yeah. Maurice, always good to chat to you. Thank you so much for coming on beginning of the year. Maurice Gravier, Group Chief Investment Officer for Wealth Management at Emirates NBD. Now for a look at some of the other stories we're following today. The Financial Times reports Chevron and private equity group Quantum Energy Partners are partnering on a bid to buy the international assets of sanctioned Russian oil company Lukoil. The assets are valued at $22 billion by Lukoil and would be divvied up between the companies, according to FT sources. Chevron and Quantum are the latest bidders to express interest in Lukoil's non-Russian assets, joining Carlyle and Abu Dhabi conglomerate International Holding Company. According to a draft statement seen by Bloomberg, the U.S. will agree to support Ukraine in the event of a future Russian attack. The plan, which still needs Washington's approval, offers binding security guarantees sought by Ukraine. The talks in Paris aim to build on momentum for security guarantees to bring Russia's four-year war to an end. And coming up, Nvidia and Siemens are teaming up to build an industrial AI operating system together. We hear from both CEOs next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Nvidia and Siemens are expanding their partnership using AI to transform industrial systems. They plan to launch the first fully AI-driven manufacturing sites this year. Nvidia CEO Jensen Huang and Siemens CEO Roland Busch spoke with Bloomberg about the collaboration.
We're announcing a big partnership between us. We've known each other for a long time, but the partnership we're announcing is really a big deal. One, we're accelerating their EDA software. We're accelerating their simulation software. We're integrating AI technology, physical AI and agentic AI, into their team center and their factory automation operating system. And so we're working together across this entire spectrum. When we accelerate the software, then we'll get to use it to design our chips and systems. When we accelerate their simulation software, we'll use it in our AI factories to simulate the thermal properties of our AI factories. When we integrate our automation and agentic systems into their AI industrial operating system, we can then use it in our factory floors with our partners, for example, Foxconn. And so we're working across this entire spectrum together, and we're going to put the technology to use basically as soon as we can.
What's the net effect for you, Jensen? Is it improves margins, efficient capital allocation? I know that might sound a bit dry, but actually right now that's the answer everyone's searching for. How has this investment in AI and use of the technology actually changed things in the real world for me?
Well, we announced yesterday Vera Rubin. It takes 6 different chips to integrate into this incredible system called Vera Rubin. And when you're done, each one of these Vera Rubin GPUs is 240,000 watts. And it is 10 times more energy efficient than the last generation. It is 10 times more cost efficient than the last generation. But it's still, the technology is insanely complicated. 15,000 engineering years came together to build this system. And so when we accelerate EDA tools, when we accelerate simulation tools, and when we can eventually, and I'm hoping very soon, design entire Vera Rubin systems inside a Siemens digital twin, the ability for us to create much more complex systems will scale. We'll do it much more efficiently. And so this is really about being able to do the impossible and being able to do it the impossible right the first time.
And let me add, once we then realize that AI creates real-world impact, this is where it really deploys the full power and also the economic power. It's not only in the data centers or in the AI factories, which we see, but also on the edge, because once you start inferencing with low latency, you bring this technology to the edge. This is a huge potential for our customers to deploy this technology, and this includes, of course, hardware, where we come from the JITs. It goes into the controllers. Some of our controllers run on GPUs.
Yes.
And then it goes all the way to the
industrial PC.
Exactly.
Yeah.
And we
now these industrial PCs are AI industrial PCs.
We supercharge it, and they can now run algorithms trained in the cloud. They can run it on the shop floor and do all that trick, what we talked about it in real-time optimization and running in a plant, and that makes a huge difference.
Siemens President and CEO Roland Busch and Nvidia CEO Jensen Huang speaking exclusively with our colleague Ed Ludlow on the sidelines of CES in Las Vegas. Well, coming up, President Trump is not ruling out the use of military force to acquire Greenland. We'll bring you the latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President Trump is not ruling out the use of military force to acquire Greenland. The White House says he's discussing a range of options to acquire the Arctic island. But the Wall Street Journal is reporting that Secretary of State Marco Rubio is downplaying military action, telling lawmakers the goal is to buy the island from Denmark. Bloomberg's Lizzie Burden has more on why Trump has made Greenland a key foreign policy objective.
Roughly 3 times the size of Texas, Greenland sits at a strategically important location in the North Atlantic and Arctic. It has vast stores of critical minerals and fossil fuels coveted by the US and its strategic rivals China and Russia. Buried beneath the ice sheets, climate change has made those resources more accessible than ever. And the thawing ice has opened up new trade routes between North America, Europe and Asia. Greenland is already home to the US's northernmost airbase and a radar station that's used for detecting missiles and monitoring space. Gaining control over Greenland could give the US government new opportunities to expand its military presence in the Arctic, as well as access to critical materials to build the economy of the future without relying on the likes of Beijing.
Never a dull day. Bloomberg's Lizzie Burden reporting there. Now for a look at some of the other stories we're following. Israel Foreign Affairs Minister makes his first official diplomatic visit to the capital of Somaliland. According to a statement, Gideon Saar's visit follows the signing of an agreement for mutual recognition and the establishment of full diplomatic relations. Israel plans to build ties in many areas, including economy, water, agriculture, and will also cooperate with Somaliland on defense as part of a new strategic partnership. Zambia says it held talks with China on a potential currency swap as it looks to manage risks tied to its largest bilateral creditor. Officials say the discussions are still preliminary, but come as the country works to complete a long-running debt restructuring. Zambia has already begun accepting some mining tax and royalty payments from Chinese operators in yuan, a move the government says could help lower debt servicing costs. Citigroup is warning of rising risks of currency devaluations across parts of Africa as weaker oil prices put pressure on energy exporting economies. Citi's chief Africa economist says countries like Angola, Algeria and Gabon are most exposed, with Angola seen as particularly vulnerable if crude prices fall further. The bank also flags Mozambique and Malawi as at risk as they try to comply with policy conditions towards meeting conditions for IMF support. And coming up, as financial markets ride out what some are calling President Trump's new world order, we'll talk to the founder of Ziemba Insights, Rachel Ziemba. That's next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Drill, baby, drill goes global. President Trump says Venezuela will turn over up to 15 million barrels to the U.S., with Washington reportedly also demanding Caracas sever ties with China, Russia, Iran, and Cuba. The White House says Trump won't rule out the use of military force to acquire Greenland, with the president and his team discussing a range of options. And open for business. Saudi Arabia scraps all restrictions on foreign stock investments as the kingdom looks to revive its lagging market. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, even though we saw a record high for the S&P yesterday at the close, today the mood is dipping a little bit towards the red. The handover from Asia Pacific, quite negative, subdued price action there, down 0.6%. So a bit of a pullback versus the strong price action that we saw roaring out of the gates at the beginning of this year. But today pulling back, namely in some of those tech names. And I guess as a response partially to the CES conference that's taking place in Las Vegas, lots of little announcements, but perhaps not enough to satisfy what investors were looking for. So some of the key names in that sector have come off a little bit this morning, AMD, Dell, and the likes. S&P futures leaning sideways, though. Not a lot to say there, but still sub 7,000. Brent, we were at $60 half an hour ago. We are continuing to trend lower this morning, down 1.3%. So we've broken through $60 to the downside. More downward pressure continues to be exerted on the energy space. And this after a torrid year last year. The energy space was down about 17%. So that is continuing this year on prospects, of course, of potential peace breakthrough in Ukraine and Russia, and then the developments in Venezuela and the fact that President Trump has declared overnight that Venezuela are going to send over 50 million barrels of oil to the U.S. Silver also slipping a little bit today in trade, down 2.1%. But again, bucking the most recent trend of precious metals and industrial metals having a great run, silver being the best performing commodity in 2025. Let's switch over and zoom in on one huge regional story today. And we're going to talk about that shortly with Christine Burke, our Saudi bureau chief. But essentially, the news overnight is that authorities are looking to loosen requirements for foreign ownership of local stocks. And you can see here, this is the performance of the Tadawul, the Saudi stock exchange, over the course of the last year. It has massively underperformed its peers compared to the likes of the Egyptian stock exchange, which is up 40%, the Tel Aviv stock exchange in Israel up 56%. So it has been a very challenging year for the Tadawul, and perhaps they're thinking if they make some of these modifications, it could increase foreign participation, ownership, and interest to participate in the Saudi market. So something to think about. We will be discussing in about 15 minutes or so. All right, let's also check in on how markets in Asia are faring. Min Lo is in Hong Kong for us.
All right, Jemana, a quick check at the commodity space because we had seen a blistering rally in precious metals, and nickel is in focus today after gaining about 10% or so in London overnight. We continue to see that upward momentum here in Shanghai. The nickel futures up by 7%. Take a look at the miners here. Xinjiang Xinjiang up by 10% in China. Copper as well. It's giving up a bit of the gains now in decline under a bit of a pressure, but still holding on at that above 100,000 yuan mark, but that continues to be the concern over President Trump potentially revisiting the tariffs. Nickel, we are fundamentally in oversupply, but concerns around supply disruption given delays in mining permits in Indonesia. But we flip the board, also taking a look at oil because the big news today is the U.S. looking to ship 50 million barrels of oil from Venezuela. Of course, what is the impact on China, which has been the biggest buyer of Venezuelan oil? We are seeing Shanghai crude under pressure, 2.5% lower. And here, the big oil majors in China also taking a hit. And lastly, quick check at the memory chip makers in Asia. This is in response to Jensen Huang's comments out of Vegas saying that that memory and storage is going to be the most critical for powering AI. And this is one of the most underserved segments of the tech sector. And here you can see big gains across the board here.
Yeah, indeed. Wow. Very strong performance in those memory names. Min, thank you so much. Min Lo in Hong Kong. Global markets have remained resilient as investors grow accustomed to President Trump's unorthodox military operations, viewing them as temporary shocks rather than long-term risks. Instead of panicking over the Venezuela incursion, traders are still focusing on AI growth, potential rate cuts, and a stabilized oil supply. Well, for more, I'm joined by Rachel Ziemba, founder of Ziemba Insights. Rachel, good to have you with us. And I know we can discuss so many different things, from the geopolitical ramifications to market ramifications of what has gone down at the start of this year. Let me start with a geopolitical question and whether you think this so-called New World Order that people are talking about, or the Don Roe doctrine that President Trump has introduced in Latin America, do you believe that this is going to intimidate, or will it actually embolden some of the other authoritarian regimes around the world?
Jemana, pleasure to be with you. Happy New Year. It's been quite a busy start to the year, right, for all of us. I think it may embolden other sizable continental powers like China and Russia in their own spheres of influence, even as they're facing more pressure in the Western Hemisphere that the U.S. has indicated is part of its sphere of influence. We continue to have questions of how seriously President Trump is taking the end to the conflict in Ukraine. And, where China's concerned, they don't want a new trade war, but they're maybe there are lots of questions about lessons for Taiwan.
Yeah, and I think what was interesting in all of this is at no point, at any point in the last couple of days, did Trump even mention the word democracy. This was not a takeover that was fought on ideological grounds. It was pragmatic, and I think they've been pretty clear and transparent about the need to get access to Venezuela's oil. The announcement overnight that Venezuela are going to send over 50 million barrels to the U.S. How, again, do you think this changes the world calculus and the relative power nexus in the world that you follow very closely, which is energy and energy supply?
Yeah, I mean, Jemana, in a way, there are two things. One, I'm reminded of the fact that just over a year ago, you and I met in Dubai on this program, and we talked about drill, baby, drill. And the place in the world where drilling is not up is actually the United States. The domestic supplies are stalling, but elsewhere in the hemisphere, this is really increasing. In a way, I see this sort of transfer of barrels as both a down payment from Venezuela, but also it's and maybe an extorted down payment, but it's also a way to avoid a shut-in of production as the U.S. maintains this blockade. Venezuela was running out of storage space because they weren't able to sell the oil to China. When we look at the amount here, this is a sizable amount, but it's 50 million barrels. That's equivalent to about a fifth of what the U.S. imports every month. It's about 2 months, maybe, of Venezuelan exports to China, a little bit less than that. So the big question is also how quickly this comes and whether U.S. business is going to be ready and interested to invest in Venezuela. But overall, we're really seeing a Donald Trump wanting cheaper oil and, a might makes right pragmatic trend, as you say.
Yeah. Well, you have a brilliant Substack, which I enjoy reading very much, and it's called Weaponized Economy. And I think this is really the manifestation of that, weaponizing the economy. And I just wonder, Rachel, whether you look at the price action in precious metals, industrial metals, the massive run-up we've seen in copper and others the last couple of months. Do you think that is an expression of that of some sorts, and the fact that there is a global sovereign race to get their hands on these critical minerals and on these critical metals that are so key for the transition and also for AI?
Yeah, and copper is linked into electrification across the board. If anything, even as global oil demand is flattening, demand for power is not. It is going up due to data center demand, due to all of the electronics that run our lives. And copper in particular has both a demand story, but also has had supply shocks. Beyond copper, I think what we're really seeing is a push to build out more processing, particularly for critical minerals. And then, of course, we've got gold and we've got silver, which are much more of a sort of inflation play, I might say, and are really the way that people are trying to play a potentially weaker dollar and to play these questions of central bank independence and whether the U.S. economy will be run hot going forward. So I do think there's still, probably not going to see as big a run up in gold as we did in 2025. That's kind of hard to repeat, but a number of these metals we should continue to see some support for.
Yeah. Rachel, always great to have you on, and Happy New Year to you. Rachel Ziemba, founder of Ziemba Insights. Now for a look at some of the other stories we're following today. Israeli Prime Minister Benjamin Netanyahu's office says Israel has proposed economic cooperation with Syria in new U.S.-backed talks. In a statement, Israel says it wants guarantees of security on its border and of safety for Syria's Druze minority. The talks between the two were held in Paris with U.S. envoy Tom Barrack present. The Associated Press is reporting Israel has now cleared the final hurdle to start construction on a settlement project near Jerusalem that would cut the West Bank in two. The tender, which seeks bids from developers, would clear the way to begin construction of the E1 project. The international community considers Israeli settlement construction in the West Bank to be illegal, with critics saying the E1 project would prevent a future Palestinian state. Iranian police has clashed with protesters in Tehran's main market and a hospital on Tuesday. That is, as activists say the death toll from the unrest has climbed to at least 29 people. The protests have so far divided Iran's leadership over how to respond. President Masoud Pezeshkian is describing protesters' demands as legitimate, while the head of the judiciary has warned of swift trials for protesters. And coming up, Saudi Arabia is pushing ahead with housing reforms as it looks to expand its property market. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Saudi Arabia is moving to open its real estate market to foreign buyers, a shift designed to unlock new capital and support a construction boom as the kingdom looks to diversify its economy. The change could draw international investors into housing projects worth hundreds of billions of riyals, even as officials try to contain rising prices at home. For more, we're now joined by Bloomberg's Zainab Fatah. And Zainab, in just a few minutes, I'm also going to be speaking to Christine about the move to open up the stock exchange also to foreign ownership. These seems to be a series of measures that are introduced by Saudi authorities in the last couple of weeks. But talk to us about the significance of what it means for the property market in particular in Saudi.
I mean, a lot of people are telling me this is going to be a game changer for Saudi Arabia, this new law coming in. It was a game changer for Dubai because once Dubai allowed foreigners to start buying into the property sector here, we started to see the investments come in. Now Saudi Arabia has a shortage of housing and the government estimates that it needs 600,000 homes built before 2030. And next year, from what we understand, there are around 111,000 homes being built across the kingdom. Saudi Arabia is such a large country with many different cities in the south, north, east, and west. So there is a lot of demand from a rising population. The population of Saudi Arabia is bigger than the population of pretty much all the GCC countries combined. And it has a large indigenous population as well as a big expat community. So a lot of investors look at this with excitement because they feel there are investment opportunities with real demand there on one hand, and investment and opportunities to develop and fund projects, whether it's hospitality, real estate, you know, in terms of commercial and...
Okay, you talk about the need for new supply in Saudi Arabia, and obviously that's one of the challenges. But also the other challenge is affordability. In your article, you talk about the fact that apartment prices in Riyadh have surged almost 100% from 2019 to the third quarter of 2025. How can they open up the market to foreign investors, so bring in even more demand, but at the same time keep property prices contained?
Well, they took several measures. So they're trying to free up a lot of land for new development, of course, by this law that has to do with the white land and ensuring that there is an ample supply of land that's available within zoned areas for developers to build on instead of just hoarding the land. They're also trying to create a lot more supply. And we have some large home builders like National Housing Company and many others, smaller ones that are actually in the market, Roshan and others, that are actually adding a lot of supply. They're kind of doing the job that a lot of the big developers here in Dubai did. When I arrived in Dubai, pretty much downtown was still under construction. And I look now and it houses thousands and thousands of people. So you can create a lot of supply and the focus is on creating supply. It's going to be tricky though. So we will see how they try to manage it when the regulations come out later this month in terms of whether they will lease some areas that are just for Saudi nationals versus others. We still don't have visibility on that.
Okay, but still a major development. Zainab, thank you so much for bringing it to us. Bloomberg's Zainab Fatah. Well, coming up, sticking with the theme, now Saudi Arabia has opened stock investments to all foreigners. We were just talking about property. We're going to talk about stock now. We will look at the significance of that move. Live from Riyadh next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Turkey's annual inflation slowed in December as price hikes for rent and household goods began to cool. However, food costs continue to surge, driven especially by the rising price of red meats and vegetables. The central bank warned that January's inflation will likely see a new bump due to a recent increase in the cost of medicine. Israel has raised $6 billion from its first bond sale in global markets since a ceasefire in Gaza nearly 3 months ago. The offering attracted more than $20 billion in bids from global investors. It follows a record-breaking borrowing spree in 2024 as defense costs surged due to its 2-year war with Hamas and attacks on Lebanon and Iran. Saudi Arabia is opening its stock market to all foreign investors in the kingdom's latest effort to boost flows and revive a market which has lagged emerging peers. The Saudi Capital Market Authority says it's removed all requirements on foreigners, such as having at least $500 million in assets under management. Let's go to Riyadh now and speak to Christine Burke, Bloomberg Saudi Bureau Chief. Christine, quite simply, how significant is this for the Saudi Stock Exchange?
Well, it's pretty significant in that this is really about the direction of travel, Jumana. So the Saudis are moving toward a full liberalization of their stock market. So what we've seen with these latest moves is essentially that the kingdom is saying, hey, now all types of investors can come and invest in this market. It used to be that there were layers upon layers of criteria that investment managers would need to meet to invest in the stock market, including having assets under management of $500 million. Now that is no longer the case. And the reason this is so significant is because this Capital Market Authority has said that this was the first step in a series of steps that need to be taken in order to allow foreigners to then own a majority share of a Saudi company. So currently, foreign ownership limits stand at about 49%. The CMA has said that once this move was out of the way, it would then undertake a review this year, which could pave the way for foreigners to own more than 49% of a Saudi equity. So investors were really looking for this as the next step in that pathway. So really what we will see now is that investors will probably become a bit more focused on these reforms. And that should be welcome for the Saudi stock market because we're seeing Saudi equities come off of their worst year since 2015. So any kind of a boost would be a good thing at this point.
Yeah, most definitely. So we've had the easing of some of the requirements, then potentially talk about lifting the foreign ownership cap, which is something we spoke about towards the end of last year. Christine, it's also very early days of 2026, but I want to talk to you about the borrowing that Saudi has undertaken just in the first couple of months, first couple of days of this year. Already, we're seeing quite a big bond issuance out of the kingdom. How does this set them up for the rest of the year?
Well, the Saudis typically love to come out with a bang at the start of the year when it comes to issuance. What we've seen in the last couple of days is $11.5 billion raised in dollar bonds. And then additionally, there was a $13 billion syndicated loan that was done as well in order to back infrastructure projects. So already 7 days into the year, we've seen that the Saudis have raised almost $25 billion in financing. That is more than 40% of the overall expected financing needs for the year, which stand at about $58 billion.
Wow.
So we're once again seeing that Saudi is kind of front loading their issuance. The key thing to watch in the months ahead will really be whether they continue to tap international markets at a rapid pace or pull back a little bit, as they have indicated they're looking to slow down, and also that they will increasingly turn to private markets as they look to diversify their funding sources.
Yeah, but that is quite an astounding number. 40% of borrowing has already taken place in the first couple of days of the year. Why are they borrowing so much? Is it on back of some of the requirements for outlays at these mega projects, or is it simply in response to lower oil prices and the pressure on the budget that imposes?
Well, I think it's a combination of factors. The government has made no secret that it is borrowing and will continue to borrow to plug its budget deficit. Last year, we saw quite a pickup in the budget deficit to 5.3% of GDP. That is expected to come down to 3.3% of GDP this year, but you're still looking at quite a wide gap. And really, that gap is a combination of things, which is the elevated spending on Crown Prince Mohammed bin Salman's $2 trillion economic diversification program, and also the fact that we just continue to see subdued oil prices that are far lower than what the government needs. So it's that combination of elevated spending, lower oil prices that are coming together to create a fiscal gap that the government needs to fill.
Yeah, Christine, great to have you on, and thank you for walking us through all Saudi developments as it pertains to capital markets and borrowing so far this year. Christine Burke, our Saudi bureau chief. Now let's switch over and take a look at how markets are faring, because what we are seeing is a bit of a dip when it comes to equities this morning. S&P futures leaning towards the red, but the handover from Asia Pacific, some of these Asian stocks, which had started the year off so strongly, has started to subside. So those indices are trading in the red. S&P futures leaning sideways, Nasdaq moderately red, and then we have the European markets also not seen doing a whole lot, but keeping a close eye again on geopolitics, on the latest pronouncements out of Trump that Venezuela are going to be sending 30 to 50 million barrels of oil to the U.S. And, of course, his comments about Greenland as well. Is that the next one we're going to have to start watching? The markets need to pay closer attention to what that might mean for an important country within NATO. So all of those are big questions. That was our show.